Welcome to this week's African Agri Overview. This week we'll be focusing on the Zambian wheat market as harvesting will gain momentum from the middle parts of September, while poultry prices are currently under pressure as well. All in this week's episode, so make sure to stay tuned. Hi, I'm Dr. Johnny van der Merwe and welcome to this episode of the African Agri Overview. Before we dive in, however, I'd like to encourage you to follow us on YouTube. By doing so, you'll gain access to regular insights into the agricultural markets of Africa. Our goal is to provide you with valuable information that can help navigate the dynamic world of agriculture on the African continent. You can also contact our regular market analyst Jacques Pinaar for more detailed reports on the African soft commodity markets. But before we do that, let's talk about the latest news in the global economy. Interesting to note is that the Chinese government lowered interest rates to give their economy a bit of a boost, which has sparked additional demand for a various amount of commodities, while lower supplies, especially from oil, also boosted that price. This, of course, resulted in higher prices initially, but lower demand from the rest of the world for oil resulted in prices to fall back again, with the latest Brent oil price currently trading on $83 per barrel. Poultry prices decreased, with higher grain prices putting severe pressure on all markets at the moment. The day-old broiler price traded on 15 kwachas per head, while day-old layers traded slightly higher on 15.5 kwachas per head. Layer cull prices, however, decreased sharply the past week, trading on 47 kwachas, while live broilers also started to decrease, trading on 90 kwachas per head. The average egg price also decreased on the back of low demand, trading on 50 kwachas per tray. As mentioned, grain prices increased the past month, with the latest maize price currently on $370 per metric ton. Soybean prices increased to $450, the latest wheat price on $530, while soy meal prices also increased and trading on $450 per metric ton in Zambia. Jacques Pinaar, our regular market analyst, will now discuss the latest news in the Zambian wheat market. Over to you, Jacques.
Good day and thanks for joining. We believe it is an opportune time to look at the Zambia wheat market once again. This season's crop development well progressed, with the harvest campaign expected to get momentum from middle September. This graph illustrates our wheat production and local consumption estimates for Zambia the past 6 years, and we have added our forecast for the 2023-24 year. The crop to commence harvesting in the next month. The market expects a record crop for the third consecutive year. Irrigation dams had sufficient water and electricity supply was stable throughout the growing season. The only concern regarding this crop is the early growing season did not experience cold enough temperatures, and this could impact negative on yields. Despite this, observers expect a crop at least in line with last year's 420,000 tons. We expect national demand at around 280 to 300,000 tons, with the surplus being exported as wheat flour, mainly to the southern DRC. During the last few years, Zambia has been a net importer of wheat, as the locally produced exportable surplus was not sufficient to meet the DRC wheat flour import need. However, as indicated in the previous podcast, the DRC typically has two wheat flour import options, either Zambia or Tanzania. Tanzania produces very little wheat and imports their entire need. When Zambia prices become relatively expensive, it pays Tanzanian millers to import wheat, mill it, and export the wheat flour to the DRC. During the last few years, Zambian wheat flour was competitively priced, and this origin probably supplied the majority of the DRC need. That said, this season, Zambia prices relatively expensive, and not impossible they could lose some wheat flour market share to Tanzania in the southern DRC. In the last podcast, we did touch on the Zambian government's use of import levies to protect the local industry. The government did lift import levies around May to allow the industry to import the shortfall, but these were reintroduced beginning of August all imports carry a surcharge of 5%, but non-SADC imports, typically deep sea, carries an additional 15% import levy. This graph indicates both deep sea and South African import parity for the past 3 years. Zambia prices typically follow South African import parity when import levies are charged. However, current prices are close to deep sea import parity, i.e. quite expensive. See the blue circle. Almost the entire import levy being discounted into the market price, although imports only likely from say May 2024. Spot price delivered Lusaka at $530 a tonne, and current forward delivered contracts for the new crop to start deliveries mid-September similar. The next graph shows the wheat price history for the last 6 years. Import parity during harvest time the last 3 years for deep sea and South Africa indicated by the blue and red lines. Both previous years, Zambian prices traded well below import parity during harvest time. See the brown circles. However, this year, trading very close to import parity. See the grey circle. Zambia wheat prices seems on the expensive side. If international prices move sideways, the Zambia wheat price probably close to the top of the price cycle. The Zambia wheat harvest campaign should commence mid-September, and one could even expect some harvest pressure, i.e. price pressure.
Thank you, Jock, for sharing such valuable insights. For those seeking more detailed information and comprehensive reports on sub-Saharan African soft commodity markets, I encourage you to reach out to Jock. I'm Dr. Johnny van der Merwe, and thank you for watching.